Mayuresh Joshi, head of equity research at William O'Neill, is now with us on the show. Mayuresh, do you think there is still skepticism about this rally that we're seeing? Will it falter at higher levels, or do you think it has more legs to go?
Afternoon, Rima. I think there is still belief that the markets might actually go down. And that's because of the kind of selling pressures that we've seen over the last few months. And obviously, I think the macro conditions, which have not changed much over the last few weeks as well. So again, I think there is some bit of skepticism that still exists in the market. But in our opinion, as we've seen in the past as well, and the report that we carried a few weeks back, I think there were a lot of indicators that were pointing out that a large part of the price damage has been done by the market. Earnestly, nobody was expecting a 1,200-point rally to probably come through, in my opinion. Yes, there were shorts in the system, Rima. But again, I think this rally has been phenomenal over the past few days. Whether this persists or not over the next few weeks, I think we'll come to know. But again, I think you have to be a little bit more sector and stock specific in these markets.
Okay, fair enough. So let's talk about those specific stocks and sectors where you're seeing opportunity. Mayuresh, hi, good afternoon. So, I mean, the broader mid-cap market seems to be getting some sort of its mojo back. Here, let's talk about some pockets. Defense got very excited. Our colleagues just told us that there is a Defense Acquisition Council meeting as well today. Would you buy anything in defense?
Afternoon, Surabhi. No, again, I think the big picture stays with defense because most companies are loaded with order books over the next 6 to 7 years. So I think the revenue visibility obviously persists for that periodicity of time. The orders have come with decent margins as well. And therefore, I think as they execute well, you're probably going to see the net results in terms of operating leverage, better EBITDA performance, and better absolute bottom line numbers probably come through. Obviously, the sector and the stocks within those sectors had moved a tad bit too much for comfort over the last few months and last few quarters as well. And obviously, the correction that you probably saw in the markets, defense stocks got beaten down the most. Obviously, a few stocks within the space would be execution was not at par, and therefore analyst expectations and what they delivered in terms of earnings were a little bit of a mismatch. But in our own sense, again, I think the big picture argument stays with defense, the ratings and rankings as we see it in markets with India, and a lot of parameters that we look at from a cancelling perspective. I think the space probably looks good. Bharat Electronics is something that you should have your own watch list if you don't. The shipbuilders apparently also have done phenomenally well over the past few days. But here again, I think the rating rankings look very, very superior. So something like a Cochin or a Mazda might actually carry on their momentum as well.
The capital market plays, Mayuresh. Nuvama, for example, is making a bit of a comeback.
Afternoon, Prashant. So I think within the space, again, I think asset managers is something that that looks decently poised. And therefore, I think you're probably looking at the construct in terms of the asset ownership as far as equities is concerned. It's very minuscule compared to the global and the emerging market average as well. The SIPs that are expected to continue, the expectations in terms of the number of households, the ultra HNI households, which might actually double from 8 lakh to 16 odd lakh over the next 2 to 3 years, will need financial advice in some form or the other. And therefore, I think asset allocation for these households itself is going to be a very key criteria for the next few quarters and years, and the help of professional asset managers as well. So absolutely. I think asset managers is something that is showing up on our screen as a filters that can probably do well with the capital market.
Okay, but I mean, here the asset managers maybe are going to be in focus as well. By the way, you've looked at this. Something is happening in Kaveri seeds, Mayuresh?
No.
I mean, sorry. Go on.
No, did not have a look at that, Prashant. So sorry for that. But again, I think the expectations in terms of La Nina conditions actually evolving. I think I read a couple of more reports which are probably indicating to that. I read an Australian agency report as well, which bodes well for the rural sector as a whole. You've obviously seen a good Rabi output, a harvest and an output expected as well. And therefore, with La Nina conditions evolving, Kharif season might be equally good, followed by an equally good Rabi season as well. And therefore, I think all these rural players, seed companies, fertilizer companies, agrochemical companies, tractors, might actually remain in focus. Because if the rural economy comes back strongly, I think the proxy to all of them might actually start doing well in terms of reported numbers. So, important.
Quick word on Z. CLSA believes the stock could double in the next 12 to 24 months. Valuations at rock bottom, 8 times PE.
Beaten down, bouncing back, but I think it's all about numbers, Rima.
So wait and watch
Oh, absolutely.
for the numbers to play out.
Welspun Corp, any thoughts here? The pipe maker, Mayuresh?
Remain extremely positive. Prashant, as a clear disclaimer, I think we've added that stock to our portfolios just today. And therefore, I think the kind of dominance that Welspun has, one of the three large global line diameter pipe makers in the world, there is a huge scope as far as the capex is concerned, both from the domestic side, where there is expectations of 11,000 odd kilometers expected to be put in terms of city gas, in terms of sewerage pipes as well. And as well as Saudi Arabia and US, where they're having a huge capex probably done because of the orders and the expectations in terms of the spending that will come through from their economies as well. So numbers holding up, more than 15,000 crores worth of order book, and operating leverage and ratings and rankings look absolutely fab. So again, biased here, and then we continue holding the stocks.
Mayuresh, these stocks were first overwhelmed with the kind of valuations they were trading with. And then Ultratech entered, and now the Adani Group, and the stocks have just been in sort of a free fall. KEI was at levels of 3,800 before the arrival of Ultratech Cement or announcement of Ultratech Cement. Now it's down to 2,800. Where from here? Is there more weakness in store?
So again, I think for the new facilities to come up, whether it's Ultratech or Adani, I think it's going to take time. So there is no two ways about it. And therefore, at least for the next few quarters, I think the existing players are probably going to enjoy the benefit in terms of sustained market share that they have, pricing at their behest as well. But with these two players coming in, the expectation specifically for organized players is that pricing might not go down, in the sense that there might not be any massive price cuts like you've seen in the paint sector. And therefore, I think what kind of market share gains do they take, whether it's from organized or from the unorganized market, is to be seen. And therefore, I think there will be some element of pricing, which will remain circumspect. How will volumes play out once these players enter the market is going to remain circumspect. And that's where the fear is. In my own sense, I think looking at how the fundamentals are moving out, how the RS ratings are shaping out, these stocks might actually go into huge time consolidation as we speak.
Mayuresh, one influences the other, chicken egg, right? I mean, but of course, what is your sense? This is how important a factor is this? Any equity implications really?
Again, I think we were just mapping out a large part of how the dollar index has probably moved over the past few years and in the past few corrections as well. And looking at the rhetoric that's probably playing out in the US, there is expectations that the currency should stabilize as we speak. And then that's probably a global view that we are taking at William O'Neill. Obviously, I think the core beneficiaries with a depreciating rupee were obviously IT and pharma. But to a large extent, I think even these companies hedge their foreign currencies to a large extent. And even if they incrementally keep on depreciating, I think the incremental benefits do not probably flow through. As the currency strengthens, then I don't think the rupee will strengthen quite significantly. I think it's going to be a slow, drawn-out process. But it's positive from a macro perspective that it just stabilizes. Because whatever gains we are getting, as an example, with lower crude prices, I think they were getting offset with a depreciating rupee as well. That was affecting the trade and the current account deficit as well. To a large extent, macros improve. Any reporting sector, specifically like textiles, like pharma, like IT, might just benefit a tad bit because of the depreciating rupee.
Now, I was just asking Mayuresh, we talked about Ola, we talked about Z, both completely bombed out, right?
Boom, yeah.
And Mayuresh, I don't know if you have a view on either of those, Ola or Z.
No, so again, I think Prashant will wait it out, because I think there are far better stocks to look at within the broader markets. They have also corrected significantly. The valuations have become inexpensive, and they're making good paces as we speak. So I think better companies to look at in the broader markets.